Welcome back to the Dividend Diplomat YouTube channel, everyone. Lanny, Bert, team, you know us by now. We are the Dividend Diplomats. Today, we're going to talk to you about an undervalued Dividend King. Let's see, everybody. Get excited. Get hyped. It's WrestleMania time. Let's go.
Guys, smash that subscribe button. Give Bert the Hurt and I a nice thumbs up. We're diving into another Dividend King. It's dividend investing time. We're headed into quarter two of 2022. And guys, you're all on the journey to financial freedom. That's why you're on this channel. It's time to build that passive income stream. This stock is down 10% this year. Bert, is it time to buy? I know that's what you're about to dive into, my brother.
That's exactly right. And as you know, everybody, Lanny said it best, we are on the journey to financial freedom, and we are trying to buy and invest in undervalued dividend growth stocks to help us build that passive income stream. That's why we are always doing research, always trying to find companies that are showing signs of undervaluation. We find them, we like them, we run them through our famous stock screener to see how well the metrics are performing, and if they're going to get a spot on our watch list, or maybe even earn a buy from us during the week.
And Bert, those three metrics: one is the price to earnings ratio, two is that dividend payout ratio less than 60%, three is dividend growth, the track record of not just growing the dividend, but how high, how fast does that dividend grow? Then we throw in the bonus metric as the dividend yield, the cherry on top, the stone cold stunner on a WrestleMania. It's just that bonus metric. So Bert, here we are, we're heading in, it's the week of April 4th, really significant volatility here, but the S&P 500 is still humming along. We're still looking for dividend stocks to buy. And, when you brought up this dividend stock on your, on this radar here, it's pretty interesting because it's a name that we haven't really talked about much on this channel, but I know we both own a significant amount in our dividend stock portfolios.
Yeah, and the reason why I'm also targeting this one is based on the last video where we discussed updates to your Vanguard strategy. I'm approaching the year on my weekly Johnson & Johnson purchase strategy. In fact, we actually just crossed the year mark here for J&J. So it's the same type of idea. What are we going to do? Are we going to keep buying one share of Johnson & Johnson every week? Most likely, yes. But also, we'll consider when the time's right, when we find a suitable replacement, to swap out Johnson & Johnson for another company. And this company, in my mind, is one of the companies that I would consider swapping out J&J for to buy going forward.
It's a good time here to talk about on this channel really quick, over a 30-second, talk here is just buy what you know, buy where you shop, buy what you use. And Bert, I think this stock here almost hits all of that criteria.
Yep. We get most of our diaper supply, our food supply, a lot of stuff coming from this store. We spent a lot of money there. We've been paying ourselves a dividend. We got the store card. We get the big discounts there. Everything is great. We love this company. We love the app. We love the drive up experience. There are so many great reasons why my wife and I love this company, and you and your wife love this company as well, Lanny. So yeah, exactly right.
They just know how to rope you in. They've got the card. They've got the perks. They've got the bonus, the savings, and they've got their own brand, which is pretty solid quality. And then the service they give you is pretty seamless. It's almost like they learn from a certain huge retailer on what they do wrong. And this company goes, well, this is how we're going to do it right.
Yeah. So everybody, are you as pumped up as we are to talk about Dollar General today? No, I'm kidding, everybody. We are here. We're going to talk about Target, ticker symbol TGT. Big Red, the bullseye, the Goliath of them all right there. Yes, you should have figured it out long ago that we were talking about Target. We freaking love this company.
Great stock, Dividend King status here, over 50 plus years of dividend increases. Target, Bert owns a ton of Target stock. and they're down 10%, trading at $210.54 at the time of this video. The market closed on April 1st. So guys, what do the dividend stock metrics look like?
Let's jump right in, lady. Let's do it. You ready? Let's go. Close of April 1st, April Fool's Day, 210.54. Divide that by 4 earnings of 14.58. That gives you a PE ratio of 14.44, well below the S&P 500, which is what, between 25 and 26x at any given moment.
It is. And actually, if I do a quick, if I could sidestep to look at Walmart, 'cause again, their biggest competitor, I would say, is Walmart. Would you agree with that, Bert?
I would agree. They have some Amazon, but what you see is Target and Walmart are the two companies that have the major retail footprint that are kind of emulating each other, and all their programs are pretty much aligning from there.
And Walmart's PE, and just doing the quick analysis on them, is about 22 times forward earnings. So Target is just saying, hey, yo, Chico, Walmart, you're telling me what to do? Go ahead, Bert.
All right, let's move into that second metric from here, that payout ratio. Annual dividend, $3.60. Divide that by the 14.58. That gives you a super low payout ratio of 24.69%. That being said, you don't want Target to have too high of a payout ratio because of what it takes to compete with Amazon and what it takes to compete with Walmart. They're low margins in a lot of their products in there. It takes a lot of cash to keep building, opening new stores, refining the apps, increasing that technology. Target having a lower payout ratio is not a bad thing.
You're right. The margin business here, it's a lot slimmer than other industries, obviously, and having to compete with infrastructure against Walmart and Amazon is key. So keeping the payout ratio kind of where it is makes sense. But as a dividend investor, you love it. You love it because there's a couple reasons why. Because you could sleep at night knowing your dividend is safe, but you also know Target has a nice habit of growing that dividend, Bert. So that's a segue.
That is, they're Dividend King, 50 plus years. We already know that's a strong long-term history of increasing that dividend. Their 5-year average dividend growth rate is only 7.78%. But Lanny, how much of that was backloaded into that 2021 dividend increase right there?
Well, why would you say that, Bert? What did they do in 2021?
They announced a not 1, not 2, not 3, but a 32.4% increase in their dividend in July 2021. Yeah, they just said, okay, everybody, we're just going to destroy it right here. And they did. They delivered.
Yeah. They increased it a little bit more than what Walmart does.
Yeah, not 1. No, Walmart's 1 cent quarterly dividend increase right there. I mean, yeah, there's a huge disparity between those two companies, which is why we own a ton of Target and not Walmart.
Wow, that's amazing, Bert. Now, because they're down almost 10%, what does the yield currently look like?
1.71%. So there's a nice little premium compared to the S&P 500. Not a lot. Not what it was 5-6 years ago when we were buying the stock when its yield was over 3%. But that shows how much the price has grown and the yield has come down over the years. So I like it. Premium.
Better than Walmart's. Walmart's yield, I think, is just below 1.5%. So
it beats your online savings account. So a lot of good things here potentially for Target. So just we can summarize them quickly before we kind of move into the next part. 14.44 PE ratio, payout 25%, 5-year dividend growth rate 7.78%. Dividend King, 50 plus years increasing that dividend, and a yield of 1.71%.
Wow, Bert, phenomenal. And guys, to go over some highlights, from the recent earnings release, talk about Q4. Sales are up almost 9%. On top of the 20.5% in Q4 in 2020. Foot traffic is up. I mean, guys, Target's still firing on all cylinders. They have an all-time high GAAP earnings per share of $3.21 in that last quarter alone. And Bert, that full year highlight, I'm like looking at it and I'm like, geez, Target is killing it.
Yeah, comparable sales, true. 12.7% on top of 19.3% in 2020. Traffic grew 12.3% on top of 3.7% in 2020. Total sales have grown more than 27 billion since 2019. Insane. Absolutely insane. They're just murdering it right now.
Earnings per share up 63%, guys. You know, that's where they hit over $14 per share in EPS, which if you go back to that first metric, analysts are expecting barely any growth. Really, they only estimate 14.58 for next year. So, you know, I don't know if this is kind of a, you know, under promise and over deliver situation here with Target.
Yeah, it's absolutely wild. So you take their current metrics where you see their PE is well below the S&P, well below Walmart, and they're just destroying it from the metric standpoint. That is why I'm even entertaining the idea of potentially one day stopping the Johnson & Johnson and doing Target. Not getting there yet, but this is going to be a company that's very high on the list of if I do stop J&J, it might be swapped out for Target.
Wow. So there you have it. So Bert, any other parting words on Target stock? So are you saying this is a dividend stock to buy now, or are you just having this kind of in the back of your mind?
So in the back of my mind, for sure, but we already have massive Target positions. So I don't know if I'm running there quite yet, but for a lot of other people out there too, I could easily see why if you're looking to start your portfolio and you want a great foundational stock for your dividend portfolio, yeah, Target would be a great one to start adding and growing.
I love it, guys. Let us know in the comments what you think of Target stock. Do you own Target or do you own Walmart? Give this video a thumbs up if you are a Target stockholder. Let us know.
Yep. And if you haven't already, everybody subscribe to that channel. Thank you again. It's been awesome. Please keep going. Let's reach financial freedom together. That's what it's all about.
Almost to 13K. Appreciate it, guys, because we wouldn't be doing these videos if it wasn't for everybody watching. That was Bert the Hurt and Laney from the Dividend Diplomats. Over and out.